So this is looking back at the last 25 years between growth and value stocks. Now, growth stocks, you pay a lot for them, but they're growing very quickly, right? These are classic tech stocks, for example. Value stocks is the orange line. When that line's going up, value stocks are outperforming, which tend to be companies that are maybe slower growing. You're not concerned about how fast they grow. You're more concerned about the price you pay. You want to buy them when they're cheap. And these styles tend to move in opposition to each other. And that's literally what you're seeing here. They're mirror images of each other. In the late 90s, you can see that blue line going up as growth stocks led by the tech sector were really strongly outperforming and value stocks were underperforming right up until we got to that yield curve inversion in 2000, just ahead of that 2001 recession. That was a sign that things were about to flip. We were about to get new leadership in a new cycle. And sure enough, value stocks began to outperform, led by financials, a classic value sector, all the way through that financial bubble, the housing bubble, right? All the way up till the end of 2006, beginning of 2007, when the yield curve inverted. Now, the market didn't peak out until late in 2007, but about a year before that, you started to see a reversal in performance. You started to see, just ahead of that 08 recession, we started to see this flip. New leadership emerged. Growth stocks began to rebound, led by technology again. And I've got 50 years of data. I could show you this has happened every single time. But here's where we are now. Gone through that yield curve inversion last year, sure enough, right into the recession here in 2020. Now you'd expect to start to see a reversion, start to see new leadership where value stocks will begin to outperform, not just over the next year, but maybe over the next 10 years. But look what's happened. In the last couple of months, we've seen the opposite, right? Why? Well, healthcare is a growth sector. Energy, on the other hand, is a value sector. We know what happened with oil prices and we know what happened with demand for healthcare. So this, instead, the old leaders got new momentum as we went into the downturn, really expanding this valuation gap between growth and value stocks. But what I haven't updated this chart for is what's happened since March 23rd. We've started to see a turnaround. Cyclical stocks have started to outperform. Energy, believe it or not, is now the best performing sector since March 23rd, since the low. And we've started to see over the last few weeks, really over the last month or so, sectors like financials and industrials, value sectors, begin to lead the market. Whereas tech's done okay, but it's been more of a market performer rather than a leader. So we've started to see this shift in the last 6 weeks or so begin to play out. Again, this could be something over the next 6 years, right? So I think it's time to start to see this shift. US versus international stocks. This is a really interesting one. I took the chart back another 10 years just to show you a period where international stocks outperformed US stocks. By the same degree, US stocks have outperformed international stocks lately. And you got to go back to the 80s to see that, back when Japan was going to take over the world. And back then, the Nikkei was rising and Japan was the place to be. And you'll see that blue line was rising. That's international stocks outperforming. And then we got a yield curve inversion signified by that blue column there and a recession in 1990. And that flipped the switch. And then we started to see US stocks outperform it. Flipped again and again, and in the last cycle since 2007, where we got the last yield curve inversion in the 08 recession, U.S. stocks have led the way. But here we are, another yield curve inversion in 2019 and recession in 2020. I think we're about to see this flip as well. International stocks tend to have more value sectors as opposed to growth sectors. So if we see that switch flip over towards value, we're probably going to see international stocks begin to outperform as well. So maybe it's time, a new cycle, to get new leadership.